Source document number 2 for credit transactions is a purchase invoice. Whereas with a sales invoice that's issued by our business when we make a credit sale of inventory, a purchase invoice will be issued to our business when we make a credit purchase of inventory from another entity, in other words, one of our suppliers, and we agree to pay that other entity cash in the future, for example, in 30 days. Every invoice will be different, but let's have a look at one. Here it is. Cool Cardigans applies a markup of 100% on all sales of inventory. And what we can see here is if we're Cool Cardigans, our name is not at the top. And in general, what happens is the seller or issuer name is at the top. So we can see that is Vandelay Cardigan Suppliers. And if our name is here, and it's been issued to us, that means in this case, we are actually the buyer or receiver of this document. And we can see some other things. It says tax invoice, and that does not actually necessarily mean this is a credit transaction. What that means is the transaction involves GST. So looking at that alone will not tell us that this is a credit transaction. What does tell us that is there is an invoice number, and it's been abbreviated to INV, and you'll see that quite commonly, invoice 67. It has a date, the 11th of February. It says who it's to, which is us. And we can see all the items that we've bought. We've bought these 3 stock items. We sell cardigans, so these will be inventory. We've bought these quantities at these prices, and we've got a subtotal here of $1,800 with some GST for a total of $1,980. And we can see these credit terms. A 5% discount will apply if this invoice is paid within 7 days, and there's a net 30 days to pay, after which it would be considered late. Let's just summarize what happened in this transaction. Cool Cardigans, that's us, we made a credit purchase of inventory for $1,800 plus $180 GST from Vandelay Cardigan Suppliers on the 11th of September. The source document issued was invoice 67. What are the credit terms of this invoice? Well, we bought on the 11th of February, so we will receive a discount of 5% if we pay within 7 days, so that would be by the 18th of February. But overall, we have a total of 30 days to pay this invoice, and that would be by the 11th of March. How would all this go in the general journal? Because that's what we're asked to do, is record these transactions. And this is just going to be a credit purchase of inventory, which we have processed previously in the past. All that's different is instead of giving you the transaction as a sentence, we're giving it to you as a document as it would be in the real world. And you can do the debits and credits in whatever order. I'm going to start with the date and my debits. So I'm going to start with inventory. Our business has bought $1,800 of inventory. That is an asset, so it's going up, and the rules say that should be a debit there. There is also GST on this transaction of $180. And for us, when we spend or pay GST or we get charged GST, that reduces our GST clearing liability. So when a liability goes down, that would be a debit. That should match up with a credit, and in this case, that's going to be an account payable. We owe the account payable $1,980. So we'll write accounts payable, Vandelay Cardigan Suppliers, and that is going up. That liability, that our obligation increases. So when a liability increases, that would be a credit. And we can see our 2 debits match our credit. We may be asked for an narration, and we just summarize the transaction. Credit purchase of inventory from Vandelay. Most importantly, we always need that document number, so always include that. And the purpose of that is we can then go and check it and find this document if we ever have any sort of discrepancy or need to verify it. And so in this case, it says IN 67, well, we're going to write invoice 67 in our narration there.